80% of hotel rooms are either vacant or closed. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. I have my stein of coffee that I'm working through, and I thought we'd have a look at another article from the Financial Review that I found on commercialrealestate.com discussing the 80% of hotel rooms that are either vacant or empty. Now, tourism is a small part of Australia's economy. 60.8 billion last time I looked, over 3% of our GDP. And, well, it's a big employer. Over 660,000 Australians are employed in this sector. So, vacancy rates at 80% are a big problem. Now, before we go through this article, let's jump over to the data room from the Property Council to have a look at some of the hotel data to get a bit of an understanding of this sector. So, here we go. Hotel property RevPAR. Now, the hotel property revenue per available room. This indicates how profitable, indicates the profitability of each room in an establishment, calculated as total revenue per room nights available. So, let's see. We go from September to 15 to June. So the data's a bit old. June quarter in 2018, so it's a couple of years out of date. So we're looking at 133 to 129. What's New South Wales doing? I mean, there you go. Peaking, getting close to 200. Victoria, averaging about 150. Queensland, we're between 150 and 100. So if we go down here, the hotel average daily rate. And you can see, again, to June, they need to get newer data, or Tourism Research Australia, so there you go. So it's from $176 now to $178, so it hasn't really changed in the 3-year window that we're looking at. The occupancy rate. And this is the occupancy rate, guys, and it was at 72.6 at the last measure. They're talking about 80% of rooms either closed or vacant. That'll be an occupancy rate of 20%. We don't even have data like that. The hotel development pipeline, and this is it's too old. It's up to 2016, so it's not even worth looking at, is it? The property value sentiment index, and well, here you go. Let's have a look. We've got tourism. Bloody hell! Look at that. 9.7. Negative 80.8. This is 12 months ahead capital growth expectations. This is what people expected to grow. So, there's a lot of people that are concerned in this sector. And property sales to offshore investors by type. Let's look at tourism. It's taken a little jump. It's gone up from 17% to 20%. So I guess there's probably some opportunities there, but look at that. Look at that sentiment, everyone. That is just nuts. So also I've got a hotel property investment. Now this is a business that I tried to find a specific hotel ETF. I couldn't really find one. They're all general ones. Listed property investments company invests in a series of hotels and pubs, so they've got exposure to that industry. If we have a look at their performance, we can go here and we can see they were starting the year at over $3, and now they're down to $2.20. So they've lost a third, more than a third of their value since the beginning of the year. So they were peaking up and just took a big hit. If any of you know of any ETFs that are specific to this industry, please let me know, because it'd be interesting to look at how they've gone. But I think this is a pretty good indication of the market sentiment, and it lines up with expectations. So let's have a look at this article. 80% of hotel rooms are empty or closed entirely. More than 240,000 hotel rooms stand closed or unoccupied, and 300 hotels have shut their doors entirely as the national lockdown and ban on international travel devastates the leisure industry. Hotel analysts STR estimates between 10% and 21% of capital city hotel rooms were closed as of April 22nd. Of those still open, average occupancy rates are just 20%. Remember that, compare that to 77.6 or what we were looking at before. This means that more than 240,000 of the estimated 300,000 hotel rooms are either closed or unoccupied. Perth is the only capital city that is sitting above 30% in occupancy for the month to date, said STR Regional Manager Matthew Burke. Well, I'm not surprised, because Perth would have a lot of fly-in, fly-out workers, wouldn't they? The occupancy is slightly higher, as in addition to the quarantine of returning international travellers, Perth has become a base for many in the resource sector, where state restrictions and domestic air services has meant they have set up Perth as a temporary base with their families. Other destinations that have occupancy just above 30% are all resource-centred destinations like Mackay, Gladstone and the Pilbara. Conversely, high leisure-concentrated destinations like the Gold Coast, tropical North Queensland and Cairns are below 20%. The 60-suite Brighton Savour in Melbourne is one of the hotels that has stopped taking guests. Michael Lee closed the doors at the end of March, the first time in 53 years that the family-owned hotel has stood empty. I mean, that's a pretty drastic move. The 4-star Riviera-style hotel overlooking Port Phillip Bay in Melbourne's affluent Bayside suburbs was bought in '67 by his father, Des Lee, a Holocaust survivor. It has been operated by the family ever since, hosting thousands of weddings and corporate events. But in March, as the pandemic spread and the restrictions on travel and socializing tightened, the cancellations started coming in. A projected occupancy rate for the month fell from over 90% to zero in a matter of weeks, said Mr. Lee. It was death by 1,000 cuts. We had 90 corporate events and 70 weddings booked at the hotel between March and July. All of them have had to be postponed or cancelled. We've had to refund over 1,000 bookings. On March 25, the hotel transferred its last remaining guest, an overseas arrival whose self-isolation stay had put staff on edge, to a nearby apartment and closed the doors for 3 months while it undertakes renovations and upgrades. We had no choice but to close. There was no point in being here, said Mr. Lee, who hopes to reopen in July. Well, there's also an opportunity for him to take advantage of this situation and do renovation and upgrade works that are probably necessary without incurring any additional loss. The opportunity cost of doing this repairs now is very low, so it's smart to do it. The Brighton is one of more than 300 hotels that industry body Tourism Accommodation Association estimates have closed their doors in the past month. Other hotels to close, including the historic Windsor Hotel in Melbourne, the Radisson Hotel and Suites in Sydney, now for sale, and 18 of the 34 hotels operated by British accommodation giant Intercontinental Hotels Group or its franchisees. New South Wales Chief Executive of TAA, Michael Johnson, said government-mandated quarantine stays had given a boost to some hotels, but with no guarantee of future business, many had decided to close. Depending on how long the recovery takes, some may not reopen. So here we go, guys. Everyone who's predicting fee recovery, there's going to be lasting impacts to what's being done. I think we'll see a recovery in stages, with firstly international travel, then domestic, as the state borders open up. But it will be a long time before international borders open. It won't be this year, he said. It will be a slow recovery. We will be entering a new norm. There will still be some form of social distancing, which will put pressure on hotels' food and beverage operations and events. Corporate accommodation demand from nearby mining work has kept the lights on at the 47 Quality Suites Pioneer Sands in Toridagi, near Wollongong. We're still getting occupancy of between 35 and 50% Monday to Friday, said the hotel general manager, Rebecca Bauer. The hotel is one of a number of choice hotel franchises to have rolled out a new work-from-hotel option for guests, taking advantage of its spacious rooms, Wi-Fi, room service and parking. For $85, Guests can work in a hotel room for 10 hours and are served morning tea, lunch and coffee. A 3-hour stay costs $45. A few guests have taken it up. We're doing what we can to stay alive. Well, there you go. That's innovative, smart. Back in Melbourne, Mr. Lee is putting together an online photographic archive of weddings at the Brighton. It is a way to stay connected to the local community and hotel clientele while the business remains closed. The hotel has the financial resources to weather a temporary closure, and its bankers have been supportive, but the waiting game and lack of certainty is providing challenging. Isn't that nice to hear? Isn't that nice to hear for a change, a business that has the resources to weather a storm? It seems to be so old school, doesn't it? It's kind of depressing. We employ 60 people and bring 40 to 50 million to the local economy, but we've also got a $238,000 land tax bill and no sales. We need to hear about an end game, he said. Well, you know, Victoria always has to take a slice of everyone's pie, don't they? Anyway, guys, where do you think this is all headed? It's going to be pretty tough for that industry. Is it just going to bounce back? As always, let me know your thoughts and opinions in the comments below. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to support us, there are a few ways you can. You can join us on YouTube or Patreon for a small fee. You can use our affiliate links at Amazon or eBay, or Independent Reserve and Kucoin for the crypto traders out there. You can buy our merch from HeiseSays, send us gold using Gold Pass, or support us via PayPal. Thanks everyone, have a great day, and I will see you all in the next video. Bye for now.